All right. Great. So, first of all, I just want to thank Alon and Joseph for producing a great conference, and all of those working on Crypto Invest Summit. Brought together some wonderful people in the space working hard. It's not easy producing an event, so let's give them a round of applause, please, if you guys can. Thank you. So, blockchain for good. Hopefully one day we won't have to separate the two, blockchain, because we know it's for good. I'm Marc Weinstein. I'm head of research and analysis at DNA Fund, based in Los Angeles. Some of you may know us. We're leading an interesting panel on how do we get there, right? There's a lot of ICOs, but there's a lot of risks as well, both from the investment side and from, running an ICO. I think gone are the days of a white paper and a dream if you're an entrepreneur running an ICO, and now there's many landmines to now. I'm here today with Alex and Emma to talk about mitigating risks. So first, just by way of brief introduction, Emma, I don't know if you want to introduce yourself and tell a little bit about your crypto story.
Sure. I'm the founder and general counsel of Satis Group. We're a broker dealer doing business as Corinthian partners with investment banking. We specialize in security tokens, but we also like a broad range of services that you would expect from, bank or private placement advisor in the space. Because for as long as I've been doing capital markets, I've also been coding and online gaming, and one of my frustrations after the crash is that it was almost impossible for the major firms and the major accountancy firms to pay attention to emerge. And all of that changed in the spring of 2000. Suddenly that shift in interest changed and people started looking. In 2017, very, very major law firms and accountancy firms started coming. And makers and emerging growth companies have always deserved these companies raising high yield debt. But we're very much our focus.
Great, thank you, Emma. And Alex, background on yourself and how you got into the crypto world.
Office of International Law based in Miami, and previously I found this. That was the first API-driven cloud-based core banking platform in the US for banks and credit unions mostly. And months ago I left Nimbus in order to focus on building Park. That's a kind of hybrid between an investment firm and very focused on rebuilding the infrastructure and very focused on fintech. And I guess that's a very reputable consulting firm. Access the fintech ecosystem. Many people suspect, being clients of banks, that antique software and antique technology. So we're here to change that, one company at a time.
Both investing as well as advising. Can you talk to us a little bit about your investment criteria or what you look?
We're quite special in this because we all control companies. We're not investing in minority. We're talking crypto here. But our idea is that where we acquire companies in the space, we're not really we're not crypto trading. We're companies, and we're very, very focused on one industry. Like I said, my criteria are you have in banking software, you have the core, the GL, lending, payments, onboarding, all those things we're building.
We're here to talk about mitigating risk with ICOs. Do you have any companies that are kind of currently going through the ICO process?
Yes, our strategy is to finance the company until the company goes live with the first clients, and find teams of co-founders that get equity. Who can those companies is Wish. Wish is, we've spent 2 years first enterprise clients right now, and we actually spent 8 months preparing for the experience with you.
Got it. And Emma, and what's your and Wish?
At the moment, we're just a few things and helping them pick out advisors and whether they're seen. But one of the things that I'd encourage anyone in the room looking to do is the advice that I gave to Alex, which is 7, 63, and 79s. Go look them up on BrokerCheck. Go check that we have the licenses
In your mind, one of the greatest risks, it sounds like, to ICOs is finding advisors and plugging them in. What types of services really are in need of right now to navigate these murky waters?
Skipping right to the end. So again, I do want to remember that we are out of 2017, we're token land, and we're into an SEC that says all these things. And that means if you're dealing with a SAFT or a security token, you need someone, investment banking license. And you need the Series 7 63 structuring. The 24 that I list is a supervisory role, but you should advisor is. Our supervisor comes from Corinthian partners. Things that best-in-class advisors should be doing for you. Best-in-class advisors. So the best attorneys and auditors, the best issuance platforms. Trying to do all of those things can't possibly be best in class.
And so Alex, right now with what are kind of the greatest risks to that you as an investor and advisor faced while pursuing an ICO?
Well, the risk is obviously, a cease and desist order from the SEC. Nobody wants to get that, especially after working for on a certain business. And of course, you have to figure out how to do everything in a compliant way. Of course, there's a premium in the ICO funding model, but there are not many people actually know what they're doing or actually are actually able to be able to do. And so 8 months and hundreds of thousands of dollars spent on legal and market is you have to do your own homework. And like Emma pointed, know-how ideally within the firm or both in terms of marketing, technology, that you deal only with professional, like Emma, for example.
Absolutely. Given all of the risks that you're describing, it sounds like legal and regulatory ICO can agree with legal bills racking up. It sounds like are top of mind. How do you get comfortable about issuing an to U.S. investors given this kind of legal and regulatory overhang?
Well, I guess so far answer, especially in the last months, is Reg D and what's called a security token. So far, I haven't seen anywhere definition of a security token, but it's obvious that it's just a tokenized security. So far, I haven't seen the answer that makes sense, unless you get regulated cryptocurrency. But or do you do a Reg A plus? But
and I guess one thing that we think about a lot is if we have a compliant offer, how can we also provide the network effect that an ICO promises? Actually, maybe but there's some kind of utility to the offering. How do you think about within a network that is, also issuing a compliant?
Well, I think first of all, utility means, and we discussed it with you need to have utility on day one. That means ideally you have that already functions. So you're offering a utility for your token. And for me, a utility token that is not a cryptocurrency cannot be listed, and it's basically a tokenized loyalty. Maybe oversimplifying things, but so far I see that, for example, with Wish, potentially having a dual. Again, we don't know yet.
And just, I guess, staying with you offering to that network, or to the user.
Which has two components to it. The front end, the kind of a messaging operating system that is AI driven. We provide a virtual assistant, digital concierge as a service to any channel, like an app. And then we put them in a call center that get back to you within 24 hours, and then send a decentralized community of service providers, local, the rewards element. So, in fact, I can imagine, miles. You're buying, spend it on flights. You could spend, you could miles. You could spend it on hotels. You could spend it miles. So I know it's one of the sponsors. So I'm almost like, that's the approach that we'll probably take.
Building out a utility function as well as, issuing.
Very hard, and if you are in the US, and that's where I'd like to even consider the term utility token. We've seen as coming out of the SEC, and as a result, I think people coming up with things that are smart contracts that more or less, as points as Alex describes, that never leave the system, that are never marketed, and so on. And then you have a security. There's lots of reasons, aside from utility within a platform, these things can operate more or less as hybrid. They can have interesting rights to them, they can have a dividend stream to them, and it trades so very rapidly. You actually trade within 90 days on Open Finance Network or Shares Post, Templum, or any of these ATSs that are coming up in and of its own right.
Yeah, it's really exciting to see a lot of the, we've been meeting with many of them as well, more security tokens. I want to take a step back because we are here to talk about risks, how we all understand the risks, and here we are, right? We're still pursuing investing in crypto, and we're still excited about the space. So I guess for those in the ICO, and this is open to both of you, what do you believe to be through an ICO versus, a traditional crowdfunding and/or?
Well, it's supposed to be a premium in terms of valuation and the security token, and for the investor, you to directly to accredit investors. It's for them. The legal costs are lower at one point, and those security token exchanges will start to. There's obviously some liquidity provided to the investor. Understand that that's that's the future. Blockchain is here to stay, so we might as well possible. Although we have many ways to the combination of technology, pre-integrated transactions, and everything with blockchain, and because Wish is just one of the first companies, it's like a learning curve for us. So we exercise homework.
And a lot of thought has to go in upfront to structuring the ICO. So the total token supply, the percentage that's going to be sold in the TGE. A lot of friction between entrepreneurs in the crypto space and investors, where entrepreneurs are frustrated with the terms that investors are demanding. Investors are also frustrated maybe with the valuations that some entrepreneurs are pursuing of tokens and low lockups. So it's really interesting exploration as of traditional investing, where we get to find almost the center between investor and entrepreneur. And I guess both of you citizens, how do you think about aligning incentives, in these ICOs?
Well, for me, it's always about supply and demand. So if you have an overwhelming demand for your token, then you can dictate the terms, right? But if you just have a few in the traditional world, you have the lead investor and somebody is setting the value. 10 people bidding on, everybody wants to be your lead investor. So incentives, I guess the template right now, when you have certain discounts during private sale, pre-sale, and ideally you don't go public. But again, I think supply and demand, that's what drives with the investors.
Interesting. So we only have maybe two. And I just, both of you have been kind of going now, Alex with Wish for the last 18 months at least. For our entrepreneurs out there that want to pursue an ICO, I guess the prize of running an ICO process. But what do you wish you knew then?
Well, it's not the first business that I scale or that I fundraise for. I knew that when I to the first ICO advisors, like about 8 to 9 months, I knew that it's not as easy as some people present it to be. So, of one-pager contracts from them that would lead me into an advantageous situation within probably a certain period of time. So I expect to learn, but I didn't expect to make an ICO in 3 months, raise 100 and stay free, right? So I was going in there, eyes wide open, and I make no mistakes that I would.
And Emma, I guess, what advice would you give to, an entrepreneur that wants to pursue an ICO?
Beyond do your diligence, make sure you meet several advisors, connect you with people who you get to meet first before you sign anything. But, be careful, do your diligence, but there are very different approaches overseas. There are ways that. But finally, I would say, It never sees its programmers leave visible in HTML code. Ever, ever. Found a last spread through, take a look at the HTML that's visible and have a look at what they've done and actually read it.
So much for this.